Hi Forex traders, you're welcome back. This is Karis Trading Institute, and today I'll be sharing with you ICT day trading strategy for passing an evaluation with Blue Guardian Forex prop firm. Okay, so we're just going to go straight to the point. I'm going to show you one of the strategies I use for scaling a prop firm evaluation, and especially with Blue Guardian proprietary firm. If you are new to this channel, I would like you to kindly click the subscription button and don't forget, hit the notification bell so you stay updated every time I post a video on this channel. If you stay till the end of the video, you will learn how to enter and exit with a small loss when you are wrong, and how to exit with huge rewards every time you are right. Okay, I'm going to show you how to take the most probable trade entry, a high probability day trading setup, so that you can pass your evaluations and become a funded trader with Blue Guardian Forex prop firm. And if you are not registered with Blue Guardian Forex prop firm, I'd like you to click the link in the description of the video. Get registered with the link in the description of the video so you get started and so you stay updated with subsequent updates coming from the Blue Guardian Forex prop firm. Alright, so the first thing I'd like you to do every time you approach the charts, especially when you want to do day trading, is that we need to know the direction of the higher time frame, because the higher time frame is the main driver of liquidity. The higher time frame is what drives the market. So we need to know what is the institutional order flow of the higher time frame. That means we'll have to go to the daily time frame, and what we are looking to see in the daily time frame is we need to know what's the market trend on the daily time frame. Are we in a bullish trend or are we in a bearish market structure? All right, so on the daily time frame, we are just going to be identifying market structure. Is price forming higher highs, higher lows? Are we seeing expansions and possible retracement in the marketplace? All right, so once we know whether we are bullish or bearish on the daily time frame, then we can come down to the 15 minutes time frame and apply the strategy I'm teaching you. Okay, so how do we know the trend of the daily time frame? We just need to see price showing us structure. We need to see price forming higher highs or higher low in a bullish market structure, or lower lows and lower highs in a bearish market structure. And how to know the current institutional order flow is that we need to see the willingness of the daily time frame to keep taking out previous daily highs in a bullish institutional order flow and prior to an objective being met. An objective is a liquidity level, a draw on liquidity, whether the buy side liquidity pool or the sell side liquidity pool. So prior to that objective being met, we like to see price showing that willingness to take out previous daily highs in a bullish market structure or previous daily lows in a bearish institutional order flow. Once we can ascertain this, then we just go down to the 15 minutes time frame and apply this strategy I'm about to show you. All right, the first thing I needed to do is to add the Asian session indicator. The Asian session indicator shows us the Asian session highs and lows. All right, so you just come here and click on indicators right here. Once you click here, or you click here, all right, once you click here, I'd like you to search the Asian range and kill zone indicator. That's the indicator I'd like you to add, Asian range and kill zone. It's already added on my screen right here. You can see that on my chart. I already have the indicator added, but just in case if you're new and you want to add that indicator, just click here. Once you click here, search for the Asian range and kill zone indicator, then you click on it. Once you click on it, it's going to be automatically added to your chart. So once you have it added to your chart, you can as well edit some things just to have few things added. So you just click this settings. Once you double tap on it, it's going to show you that indicator. Right, so right here, like, we need to fix some settings. Display Asia range, leave this here. All right, then Asia range color, you can change the color to whatever color you want. You can see mine is this color, so you can change it to suit the color that you want. And also the time, also take note of it here. Then display London session. London session is you can change the color of the London open. Display London open range color. All right, display New York open range color. You can change the color, so the New York is blue, the London open is that orange color. So click OK. These are the ones I'm interested in using. Let me remove the last one, London closed, so I could just untick this. I'm only interested in the London and New York. The London is the orange, the New York is that color you're seeing there. All right, so this strategy involves just three things you will have to pay attention to. The first is you need to know what's the higher time frame directional bias, what's the higher time frame institutional order flow, what's the higher time frame market structure. Are we in a bullish market structure? Are we seeing higher highs, higher lows on the daily time frame? Are we seeing willingness of the daily candles to take out previous daily highs in a bullish institutional order flow, or are we seeing willingness of the daily time frame to take out previous daily lows in a daily bearish institutional order flow? Once we ascertain this and we know where the drawn liquidity is on the higher time frame, all right, remember the drawn liquidity is a pool of liquidity, relative equal highs, relative equal lows, all highs or old lows. Those are liquidity levels. So for example, if we have an objective on the daily time frame, okay, that is yet to be traded into, for example, right from this level where we had price created a new higher high and retraced back into that bullish order block with the tiny implied fair value gap right here. This level was outlined for us at the mentorship community, and this was also coinciding with a discount level. If you mark between the recent swing low here to the swing high, price traded deep down into a discount level below 50% of the range is a discount, and our culture as usual is that we like to buy a discount market and we like to sell a premium market. Okay, so price was already in a discount institutional reference point, and here it's the bullish order block with the implied fair value gap. All right, if you are yet to understand institutional reference point, kindly search on this channel the lesson where I taught the 7 institutional reference points. You're going to have clarity on all the 7 institutional reference points, the order blocks, the fair value gaps, the breaker blocks, mitigation blocks, and liquidity pool. All right, so just get to study the video and you will thank me later. Okay, so right here we knew that price was supposed to start going bullish, and where is the drawn liquidity? So if we were trying to buy this pair from this level, our drawn liquidity would be this previous old high, because there is a pool of buy side liquidity residing above it. We said buy side liquidity resides above an old high, above equal highs, above relative equal highs. That's where a pool of buy side liquidity is residing, and we already know that it's also going to trade into this liquidity void that was previously created. We were anticipating that price was going to fill up that pool of that liquidity void right there and that bearish order block. So those were our target. That was our draw on liquidity. Okay, so we're gonna see how we will start framing these buys on the 15 minutes time frame using the strategy I'm going to teach you. All right, from the 15 minutes time frame, let's see how we started to buy this pair from a 15 minutes basics using this simple strategy. Okay, so let's just outline this level with a line here. So that's our point of interest. So let's just go to the 15 minutes, and we already have our Asian session indicator already added on the chart, and we are just going to be observing 3 things. The first thing we would like to see every time we come to the chart in London session is that we would like to identify a clear liquidity run above the Asian session high or below the previous session high. In a bullish institutional order flow, we like to buy below Asia, and we are interested in catching just 30 pips in London session, just 30 pips in London session. So we like to see price trade below Asia if we are bullish and we catch just 30 pips, or we like to see price trade above Asia in London and we're interested in catching just 30 pips. Okay, sometimes price might do the liquidity run or liquidity sweep just before London session. All right, might sweep the highs or sweep the lows, so we are buying below Asia or close to the Asian low, and we are selling above Asia or close to the Asian high. All right, so once we identify that liquidity run, the next thing we are looking for is we need to see an opposing order block created. Okay, we need to see another block created in the opposing direction. Then the third thing is we need to identify the drawn liquidity. The first, remember, we need to see a liquidity run above or below Asian high or close to Asian highs and lows. Then we need to see an opposing order block created in the opposing direction of the liquidity sweep. And the third is we need to identify the drawn liquidity on that 15-minute time frame, and we are interested in catching just 30 pips in London session. 30 pips in London session. This may not appear every single day if you are trading just one pair, but if you are trading multiple pairs, you are going to see this setup happening almost every single day. Remember, day trading is not everyday trading, so we discourage traders from thinking that they're going to see trades every single day, because that's not what day trading is. Day trading is not everyday trading. You don't have to see trades every single day. Okay, so let's see how this applies to the chart. The first is we need to see a liquidity run or liquidity sweep below Asian low. We need to see another block created in the opposing direction of the liquidity run, and we need to identify the drawn liquidity on the 15 minutes where the liquidity pool is, and we are targeting just 30 pips. All right, most times our stop loss will not be more than 10 to 12 pips, and we are doing just 1:3, and we're good. In London session, we are done trading. This is a very powerful strategy I'm sharing with you, and you're going to enjoy it if you sit down to do a lot of hindsight study and learn to see these things for yourself. If you train your eyes to see these things for yourself, you're going to come back to appreciate me. And if you make a lot of money trading this strategy, you can as well join my VIP mentorship community, where you can get to share your trade ideas with other profitable traders in my community, and you also have access to my sessions, my trade commentaries, my trade setups, and you can also ask me questions in the VIP community. All right, guys, so let's go into the chart. So this is Asian session right here. This was on a Wednesday, 28th of June 2023. Asian session open around 1 a.m. to 5 a.m. GMT plus 1. Also, that's Asian session. At London session, 7 a.m. we are looking. This is 7 a.m. You can see that, right? So what are we looking to see at 7 a.m.? We identify a liquidity run that has happened from that 7 a.m. or has happened before 7 a.m. to trade either above or below Asia or close to Asia. Then we need to see another block created to the opposing direction of that liquidity run. Then we identify the drawn liquidity and we execute our trades once price returns to the order block, and we are targeting just 30 pips. So you can see this is that Asian low. Price had traded below Asia just close to 7 a.m. We had a liquidity run below Asia. You can see that price swept the low here and traded into 50% of that bullish order block by the left, which is the bullish order block mean threshold right here. All right, Asian low has been swept. This is sweep on liquidity or run on liquidity. Then we saw a bullish order block being created. Remember what a bullish order block is. A bullish order block is the last sell candle that was traded through by one or two bullish candles, all right, with the body of the candle closing above the high of the sell candle. That's a bullish order block. Okay, so right here we have our bullish order block here. Where could we have taken an entry? Once price returns to the bullish order block, we execute our buy with our stop loss below the order block, and we just take 30 pips. All right, so we identify the drawn liquidity. Where is the drawn liquidity? The drawn liquidity is the relative equal high above Asian high here. You can see it here. That's one of it. Then we have another relative equal high right here. All these are the draws on liquidity, the drawn liquidity, and also this gap right here. We are looking to see price trade into them. Okay, but we are just interested in 30 pips. So let's see if we have 30 pips on this trade setup. Just pick this. Let's measure what's the stop loss. Okay, the stop loss is less than 7 pips. It's even less than 7 pips, guy, and we are looking to catch just 30 pips. Just look at this, guys. 30 pips is being taken on this trade. So let's see this. This was our entry, and we are looking to take just 30 pips on this trade. This is a very powerful concept I'm sharing with you. We are looking to take just 30 pips on this trade, and we're good, guys. Okay, we're good. We're good. So this is it. So you can see that this is 30 pips. We already took profit right here, and this is 1:4, or even more than 1:4. We've already taken profit, and we are done trading for that day. Don't fall to the indiscipline of wanting to overtrade or do multiple trade entries for the day. Once you can catch 30 pips every single day, you are good to go. The next day, just look for the same trade setups and you're good. Okay, the next day we are on the chart, 7 a.m. we are looking to see a liquidity run. All right, so this is 7 a.m. Look at what happened. At 7 a.m. price traded below the relative equal lows right here. Price swept everything, traded into another bullish order block. This is in line with our daily institutional order flow. Remember, we're anticipating bullishness on the daily time frame. All right, so price swept the lows here, traded into that bullish order block. What are we waiting to see? Let's identify a bullish order block. All right, on that same 15-minute time frame, then we identify the dollar liquidity. So where is the order block? This is the bullish order block, the last sell candle right there. That was traded through by a bullish candle. We have our bullish order block created. Okay, we have our bullish order block created. Then where is the drawn liquidity? The old high here, the old high right here, and look at this. That previous day's high is also the draw on liquidity, a draw on liquidity. Okay, so let's see how many pips from entry to stop loss will have been entering around this level. Stop loss would be, okay, stop loss this time around is close to 20 pips because this is a large candle order block. So how do we reduce our stop loss here? Is that you go down to a 5-minute time frame and look for the same thing. Just go down to whatever 5 minutes or 1 minute time frame and look for a shift of market structure. All right, once price returns to the same internal range order block, you take your entry from a 1 minute and 5 minute perspective, and your stop loss will not be more than 5 to 10 pips. All right, so that's how to reduce your stop loss in situations where you have a large candle order block. Okay, for some of us who are experienced, will have waited to see price trade into 50% of the order block, which is the order block mean threshold, bullish order block mean threshold. But some of you would fall to the fear of missing out on this trade, and you will not be able to catch the trade. Okay, and we are targeting just 30 pips. You see, this is 40 pips already prior to the drawn liquidity. Okay, so you just pick up this, put it here. Let's see. You have your 30 pips bagged. If you refine your trade setup from a lower time frame perspective, you've gotten your 30 pips or 40 pips, and you're done trading for that day. Now remember, what we are teaching you is not how to catch everything in the daily range. Okay, we are teaching you how to position yourself where you can catch at least 40 to 50% of the entire daily range, and you're good. All right, so leave this to the market. You've gotten what you should in a risk adjusted manner. That's the point. Okay, guys, so this is Asian session the following day. We have Asian session, and look at what happened here. Around 5 a.m. we had a liquidity sweep above, but we were only interested in taking a trade at 7 a.m. all right, at the beginning of between London, which is 7 to 10 a.m. New York, 7 to 10 a.m. GMT +1, which is 2 to 5 a.m. New York time, convertible to your local time zone. You can convert that 2 to 5 a.m. New York time, convert it to your local time. That's it. So at 7 a.m. London session, look at what we see. Price has traded below that Asia low, and price traded into a bullish order block by the left, an institutional reference point right here. price traded into it. Price is finding support at an institutional reference point at London. Okay, we had a run on liquidity. What are we looking for? We are looking to see a clear bullish order block, and once price returns to the order block, we take our entry. So look at this. Once price traded into that order block at 7 a.m., at the start of 7 a.m., look at what happened. Price created a bullish order block right here. The last sell candle here, you can see that. We can outline it here, extend. The last sell candle here was the bullish order block. Price traded back into this and ranged for some time until New York session, and we saw price traded into the liquidity, the draw liquidity. So where's the draw liquidity? We have one here, the all high or relative equal highs. We have another right above here, the all highs there, or the relative equal highs. You can use the body of the candles because that's the true institutional pricing, the body of the candles, not the wicks of the candle. All right, guys, so let's see how many pips from entry. This will have been 10 pips from entry to the low of the order block. So if you took an entry and waited, you will have gotten your 30 pips around New York. This is about 34 pips even before the drawn liquidity was traded into. So you can see that, right? All right, guys. So this is really very simple. All I need you to do is to just go to your chart and do a lot of hindsight study to see how you can identify these things happening in the past, right? Try to see these things happen in the past, and you can also do back test, sit with a live chart and do these things, practice these things on demo. Practice it on demo and see it happening first, okay, before you can engage in doing live trades. And of course, this is the easiest strategy to pass a prop evaluation with Blue Guardian, guys. Don't forget, you need to click the link in the description of the video and get registered with Blue Guardian Forex prop firm. Let's do one more example. This is Asian session, and we are looking to identify a liquidity run below Asia because we are in a bullish order flow. All right, and we are looking to see an order block in the opposing direction of the liquidity sweep, and we are identifying the drawn liquidity, and we're just interested in catching 30 pips in the direction of the market. Okay, so this is Asian session. 7 a.m. price had opened. We saw that 7 a.m. price had traded below the low of Asia, which is a very good point to buy once we see a bullish order block created. So you can see this. This is the last buy candle, the last sell candle, sorry. The buy candle couldn't close above the high of that. Okay, this is the last sell candle. Let's see if we have a bullish order block. Of course we have. We do have a bullish order block. The high to the low of the sell candle was traded through by that one bullish candle right here. Okay, and look at this. At 7 a.m. price traded back into the order block. So our entry will have been here at the high of the order block to the low of the order block, less than 5 pips, and we are targeting just 30 pips to the upside. Okay, where's the drawn liquidity? The drawn liquidity is the highs there, and that previous day high, which is this. Look at this. Just look at this. The previous day high there. So look at what price did. Price traded up, went back into the same order block or breaker block, you can call it here, and we're interested in just 30 pips. 30 pips. This took time to unfold itself. It took time. 30 pips, and we're good. You can see that, guys. So guys, if you like these videos, please, I'd like you to hit the like button, hit the notification bell, click the subscription button. You can also drop a comment. Let me know what areas you like me to record a video for you on this channel. Until next time, I wish you good luck, good trading, stay safe.